Good afternoon and buenas tardes. Welcome to Adulting for a Brighter Future, all about finances and taxes webinar. I'm Antonio Tijerino of the Hispanic Heritage Foundation. As an organization, we are a national nonprofit focused on education, workforce, social impact, and culture through leadership and innovation. In terms of the education part of that, I remember way back when I was getting good grades when I was in college, maybe okay grades, not necessarily good, but I didn't have a strong financial education outside of school and ended up running up debt. So basically it was this process in my mind. Let's see, I have a credit card that arrived in the mail and spring break is coming up. That's an easy choice, but it actually wasn't easy when I actually had to pay it back. Or if I had a car payment due, I was like, no problem. But it was a problem because like many of us, I didn't prepare for the future and struggled during tax season. Every April, it was like waiting for a month-long dentist appointment, which is why I've gone full circle. And today I'm hosting and moderating our first webinar of the year as part of the hashtag Leading con Educación program to help young Latinos, and let's face it, parents and other family members in many circumstances with important tax and finance information. The information is critical and part of our education that is often overlooked. This is the second year of Leading con Educación, an educational job readiness program brought to you by our partner Intuit TurboTax to help Latino youth and college students with personal tax finance content like this webinar. But in addition, we'll be providing 40 educational grants and scholarships this year, as we did last year. And it was a huge program for our organization to just be able to provide that support along with these resources and guidance that we're providing today. So please keep an eye out for the information on applying for the scholarship during this webinar as we provide links in the chat, or you can visit hispanicheritage.org/leading con educación. Again, hispanicheritage.org/leading con educación. So scholarship applications will be open until May 8th. So make sure you take advantage of this great opportunity. And thank you again to Intuit TurboTax for not only providing this guidance, but again, actual resources to our youth. That is walking the talk. And now going into the interesting part, I am thrilled to welcome two of the most talented and smart people I know from the world of money and finance to our virtual stage to talk about dinero and to inform you all and me, because I'm still learning, how to avoid those common mistakes we all tend to do even as we become adults. Today, we are here to learn about how to take control of your personal finances, starting with your own taxes. First lesson, don't do what I did or what I didn't do. So Brittney Castro, who is a certified financial planner, founder and CEO of Financially Wise, is here with us. And Miguel Burgos, certified public accountant and TurboTax Live Tax Expert. They know what they're talking about. Glad to have both of you on, and I will be taking notes, believe me. But before we get started, it's important to take a minute and understand why we're here today. Intuit TurboTax recognizes the role of education and financial literacy in helping Latinos tear down barriers that keep us from economic growth. Currently, only 1 in 13 students in underserved schools has a personal finance curriculum in the United States. Of those that do, the curriculum often found in many of today's schools lack the latest real-world financial tools available for informed personal financial decision-making. This limited access to personal finance knowledge impacts our Latino students disproportionately. That's why free webinars and additional curriculums like this are so important to our Latino community. We're as good as the information that we have access to. Organizations like Intuit believe everyone should have the opportunity to prosper. Prosperity means something different to different people, but finances often sit at the core of living the life that you want to live. Helping students prepare for the future increases equitable opportunities for all. And we are thrilled that Intuit has selected the Hispanic Heritage Foundation as a partner to share in their commitment to the Latino community. So gracias, Intuit. We appreciate your support of HHF, but more importantly, we appreciate the support of our community overall. As our experts share amazing finance and tax information, we understand that you may have additional questions. So we encourage you to place them in the Zoom chat and make sure that it's going to everyone, because I think the default is just to panelists or something. So we will do our best to address as many of you as possible. Also, give us comments. We want to feel your energy. And we will get back to the questions at the end of the webinar if there's enough time. Both of our Intuit experts are bilingual. So if you have any questions that you would like to share in Spanish language, please feel free to do so, especially if your parents are around and have a question. That's really important. So let's get started by passing the virtual mic over to Brittney to share a little bit about herself and the significance of starting early financial planning. Brittney.
Hi, thank you so much. I'm very happy to be here today to talk about financial health and well-being. It is something that is around for the rest of our lives, money. So the sooner we can start to learn how to manage it, save it, make it, invest it, protect it, the better off we'll all be. So just a little bit about myself. I'm a certified financial planner. And I've been in the industry 15 years. I ran a financial firm for a long time, sold that in 2020, and now all of my time is focused on brand partnerships and speaking around financial literacy and empowerment. That is my passion. Fortunate to have worked with many wonderful companies. Chase, currently working with Mint as their in-house CFP, and I really believe money is so important for us to learn about because it affects so many areas of our lives. And no matter where we start or where age or stage of life we're in, we can always learn more. We can always improve our financial situation. And so my hope today is that I'm going to give you a lot of helpful information to help you today, but also inspire you to just commit to learning about your money, because I can tell you firsthand, I've been in the industry 15 years. And I still learn every day about money and financial strategies and how to improve. So it never ends. It's a lifelong, ongoing relationship. So to dive in, we're going to talk specifically today about building your net worth and budgeting. Then we're going to go into just saving and how to create specific financial goals so you actually are clear about what you're saving and using your money for, which, believe it or not, most people don't have clarity around that. So it's very difficult to reach goals if you don't know what the goals are. Then we'll talk about credit and debt management, which is very important. I'm sure you know by now in the US, we love credit score, and learning how to use debt wisely is really important. And then also I'm going to talk a little bit just about investing principles. So to dive in, net worth is very important because really that is like your financial report card. So when you're just starting out building your financial future, and as you progress on your financial journey, this is a great tool to check in on your progress every year. So I recommend people do this once a year. If you want to do it more, that's great, but you really don't need to. But basically your net worth is just saying what you own, meaning all of those assets, minus what you owe, and those are all of your debts or liabilities. So this is important because everybody is on a specific financial journey, so you cannot compare yourself to others, even if you're at the same age or stage of life as your friends. It's very difficult to compare financial situations. So I always tell people just figure out your own net worth. And if you're growing that net worth, meaning you're growing your assets and paying down your liabilities, then you're doing wonderful, right? I think it's a very important thing to learn how to celebrate your progress in your financial life, your wins, because that really does keep you motivated to keep going. So assets would include things like your car, if you own it, your home, if you have a business, that's business equity, the money in your savings account or checking account, the money in your investment account, if you have that. And then liabilities, like I said, are all the things you owe, like you owe money to someone. So maybe a mortgage, student loan. Some of you might have student loans or be getting student loans. You're going to owe money to whoever that student loan provider is, maybe your car loan, or just other personal loans or credit card debt that you might have. So that's a really important foundational piece of your financial life that, again, if you just did that once a year, wonderful. The next thing you want to do is figure out your budget. So when we talk about budgeting, I really believe in the pay yourself first strategy. I actually wish I would have implemented this right away. I was always good at saving my money right out of college, but I didn't know this specific term or name for it until later. So if you can implement this now, you're going to be light years ahead of most people. And then what you do is every year you just try to improve it or refine it. So with budgeting, it's really figuring out how much money is coming in every month with income. So that could be from your job or maybe multiple side gigs that you're doing. And then where does it go, right? So you're going to have fixed bills that you're going to pay for, which we'll talk about what those are. And then you're going to have your variable bills. But before we even spend money on the variable expenses, you want to have pay yourself first category, which is your savings, right? You want to define how much can you set aside for those goals before you spend money on all the fun things like going out, travel, clothes, hobbies. And if you can implement this, it's going to make your life so much easier. So the Mint app is wonderful because with the Mint app, you can actually set up your budget. So you can set how much do you pay for rent? How much is your car payment? How much is your utility, like cell phone bill? Then you can actually set up your savings goals in Mint as well. So then you could capture, okay, I'm going to put away $100 every month into my emergency fund, which we'll talk about. And then you can see, okay, now I have $1,000 left over to spend on all these variable things. So by leveraging an app like Mint to track your budget, it's going to help you manage your money more effectively and you're going to have more clarity. So the whole point is to have clarity. Where is your money going and how do you make it better? And this is going to be very useful because as you're graduating, making decisions of how much can you afford in rent every month based on your income, or can you buy a new car and take on a car payment, you'll always come back to the budget and you'll figure out, okay, well, what do the numbers tell me? And can I afford that? And if not, how do I make it work, right? How do I maybe increase my income or move around some of my expenses so that I can take on this additional new expense? So a budget is your friend. And I know it sounds kind of cliche to say that, but you really want to embrace your budget. It's not something you avoid. It's not something you hate or like have anxiety around. It's really just meant to help you make decisions with where is your money going. And some tips I would just suggest are review your budget and spending on a regular basis. So like I said, the Mint app is great because you can have that app that shows your budget and then it'll track your spending against your budget. So you can say, uh-oh, I spent a little bit too much on food this week. That means I have to kind of watch how I'm spending over the next 3 weeks because there's, the full month that I have left and I only have X amount of dollars for food. So the numbers are going to tell you the truth, and that's where you get to decide where do you reduce, how do you increase income, and then you just kind of, like I said, refine this year after year because your life is going to change. You're going to graduate, then you're going to get a job, then maybe you're going to move or get married. So our lives are constantly changing, and that's why we all have to constantly review and update our budget throughout our life. Next, you really want to define what are you saving for. So this is where we start to get clear about your financial goals. So we'll get to the next slide here. And the dream worksheet is very valuable. I created this years ago because I would work with clients and they would say, well, I think I should, save for a house or should do this. And I said, who cares about what you should do? Why don't you figure out what you want to do and build a plan around that? Because once you define what your dreams are, short-term, medium-term, and long-term, then you could create financial goals that are meaningful and relevant to you. And that's really important because I find that most people will be motivated to do the work if it's something they actually want, right? Not what they should want, but if it's something you actually want, you're going to put in the time and energy to make it happen. So this dream worksheet is very valuable. You can say, maybe one of your short-term dreams is to buy a car. So you want to save for a car, down payment. Maybe you want to travel after school, after you graduate, you want to go on a big trip. And, I know a lot more people are wanting to travel since we really haven't been able to over the last few years. Maybe in the medium term, you want to be able to save for a house in 10 years. And then long term would kind of be like retirement, investing in things that will grow our money. So we have that kind of freedom to stop working one day and just live off of our assets. But this is really important to define what is it that you really want and then turn them into financial goals. So every goal should have a timeline. It should have a target amount. How much do you want to save? Because that's going to help us work backwards and figure out, okay, what kind of savings do we need to set up every month in your budget for these specific goals so that you're making progress. And the wonderful part is they're your goals. So as soon as you define them, you can even use the Mint. There's a savings feature. You can set, I want to pay down my debt. I want to build a cash cushion, which typically everybody needs a cash cushion of 3 months or 6 months of their expenses in a savings account. And the reason is that's going to be the money for emergencies or opportunities that come up that's not locked up in investments. That's not, debt that then you have to pay down and worry about an interest rate. This is just money for you, like the cushion, right? So if that maybe is going to be one of your goals, you want to build a cushion of, $5,000 or whatever the number is. And then maybe you have some student debt that you really want to work on paying down, or maybe you want to save for a car down payment or a big travel expense. So make those goals as clear as possible and then set them up in the Mint app or somewhere else where you can see them on a regular basis, and then create a savings strategy so that you're automatically saving to each one of these goals every month. And that way you don't really think about it. It's happening without so much maintenance or work on your end. I believe the whole idea of financial planning is to make it as easy as possible for ourselves by setting up as many systems as we can to automate your money, because otherwise we're busy, we forget, we get emotional, and we want to spend the money if it's not coming out of our account. So just try to set up as many systems as possible in the beginning and just improve those systems as your life goes on. So next slide, please. So here's an idea of just making sure your goals are smart. This is very important. Like I said, you want to have clear financial goals. So let's say you want to save for a car down payment in 1 year and you want to save $6,000. That would be enough to make a down payment, and then you would finance the rest in a car loan. So with this, you want to just make sure, okay, I want to save for a car down payment. I'm going to put $500 per month into a specific car savings account. And by doing this, I'm going to reach my goal in 12 months. So now it's very clear. I want $6,000 in 1 year. So in order to do that, I need to put $500 away for this goal. And then you just really want to make it relevant. I really want this car because then it's going to allow me to get around easier. I'll, obviously have a lot more freedom. That way you're motivated. You're going to want to do the 500. You're not going to want to spend that money elsewhere. And that is what you're going to do for each one of your financial goals. And this is very important because, like I said, you got to have the motivation and then the systems so that it actually works and you see the progress toward your financial goals. From there, really, this is just building out the rest of your financial plan. So I like to keep things super simple when it comes to money and financial planning because life is hard already, it's complex already. So really, you can do your whole financial plan in one page. And it would look something like this, which is basically, we call it a 4 cornerstone approach. Once you review your budget, you're going to figure out, okay, I have $200 or $300 every month that I could set aside for my financial goals. And maybe that's not all the money you need for your goals, but that's the amount you could start with. And I always encourage people to start with what you can and set up the system and then work toward improving to get more income so you can save more. So in your life, you're going to have to figure out what are your priorities based on your goals and your money that you have in your cash flow. So that first corner, we're going to talk about your cushion. Like I said, it's 3 to 6 months. You might want to have a high yield savings for that, which we'll talk about in just a moment. And maybe debt reduction. Maybe you want to add a little bit more toward your debt so that you can start to pay it off. The other cornerstone, maybe it's not as exciting, but this is the protection that you're going to need throughout your lifetime. So if you own a car, you need car insurance. If you own a home, you need home insurance. Disability insurance when you're working, that's protecting your income. Life insurance, maybe down the road when you're getting married or have a mortgage or have children, you want life insurance. And then below that is that's like when you start to save for all your different financial goals. So short-term goals would be that category there. And those are usually in savings accounts because they're short-term and you want to access the money without a penalty. You don't want to lock it up in investing because, you know, with investing, you have to realize there's volatility and it's not smart to take on volatility if you need the money in the short term because we just don't know. But with long-term money, that's where you can invest, right? So for retirement, you can invest in the stock market and real estate and crypto. Those things are more volatile, but over time, with the right risk return ratio, you'll compound your dollars, right? We talk about compounding interest. That's where you're able to do it because you're not worried about it. You don't need it in the short term. So you can let it grow and kind of go up and down, but over time it's going to go up if you're invested correctly. And of course, you're going to do your research and figure out what that means for you. But this is the way you're going to design your financial plan. So maybe right now you only have $200 and your focus is really just building a cash cushion and paying off some debt. So that $200, maybe you put $100 into your savings and $100 extra toward your debt reduction. You want to keep it simple. And then 6 months from now, 12 months from now, you reevaluate. Can you save more? What's the progress on your goals? Maybe you've reached the goal so you don't need to save there and you could redirect the money. So again, with short-term goals, you're really going to leverage a high-yield savings account. And there's various high-yield savings accounts that you can open up. You just do some research there. That would be different than your normal checking and savings account at your bank, mainly because it's going to earn a little bit more interest. And it's usually online, maybe meaning they don't have like a branch or brick and mortar ATM you could go to. But that's also nice because it's out of sight, out of mind. So you're going to have your normal checking and savings account at this bank, but maybe you open up your high yield savings for your cushion goal, your home goal, your car goal, and travel goal. And it's out of sight, out of mind. And you're adding from your budget. You remember, you're going to set up the system to add $100 every month into one of those accounts. And then if you need it, you just transfer it back to your normal checking and savings account. So this is a great way just to start to separate your money based on your goals. So you're clear, what is the goal? How much do I need to put? And then the systems can happen. And then if you're working on debt reduction as a short-term goal, then the best thing you can do is just start pen and paper. Don't need to complicate things. List out all your debts. What is the name of the debt? What is the balance? What is the interest rate? What is the minimum payment? Maybe it's a student loan debt. You know, you have $10,000. The interest rate is 6.8%, and you have to pay $300 every month. So you're just going to list it out. Maybe you have a credit card that you have $1,000 balance on. It's 19% interest rate. The minimum payment's only $50. So this is where you're going to get clarity. Okay, how do I pay off this debt in the most efficient way? Well, you're going to start with the debt with the highest interest rate first. So in this case, I would say if you have another $100 that you want to add toward debt reduction, start with a credit card because that one's 19.99%. Pay off that, and then once that's done, go to your other one, which in this case was a student loan, and start to make additional payments. So this is the best way to start to reduce your debt in the most effective and efficient way. From there, you probably have long-term goals, and this is where we talk about investing, which I know is like the fun topic of money. Everybody wants to invest, which I think is wonderful. And many of you maybe are investing. Maybe you started investing, got an investment account in the last few years, maybe you like through an app on your phone. You know, the nice part about technology is made it super easy to start investing. However, with investing, you really have to do your research and homework so that you become a wise investor. And what I mean by that is you want to leverage as many investing principles as you can. So what are you investing the money for? Be clear about it. If you need the money in the short term, maybe it's not a good idea to take on so much risk with investing in the stock market. So be clear. Then diversify your money. So what that means is you spread out your money. So not all of your money is in one stock or one mutual fund. It's multiple. That's going to help reduce the risk so that it's not as volatile. Then dollar cost averaging is one of the easiest things you can do. And that's just saying every month, I'm going to put $100 into this diversified portfolio in my Roth IRA or brokerage account or 401k. And regardless of what the stock market is doing, I'm just putting the $100. And what happens is it takes the emotion out. So you're not, oh no, is it the right time to get in? Is it the right time to sell? You get out of all of that and you just invest $100 every month. And what happens is over time, you're going to get the type of rate of return you want, right? The whole point of investing and taking on additional risk is to get higher rates of return. So we're compounding our money faster. So if you are investing, that's great. Just make sure you continue to learn and become smart and put your own philosophy together so that you're very clear about how you're approaching your investments. Next up, we have our FICO score, which, if you haven't already noticed, is a big part of financial planning here in America. So we love the credit score here. And nowadays, it's super easy to get the credit score. You know, before, when I first started, it was hard to find it. You didn't understand how it was even calculated. But even, you know, apps like Mint, we can see your credit score in the app, which is wonderful. So really, your credit score is just something that is used to see how worthy of a borrower you are. So when you want to go get a loan for a house or a car, they're going to ask for your credit score, and they're going to say, okay, do you pay your bills on time? You know, are you good at managing your debts? This is what the score is telling you, basically. So it ranges anywhere from 300 to 850. 850 is the highest. And you just want to check your score and make sure it's healthy. And then obviously, if it needs to get work, you know, if you need to work on it to improve it, then that's where you're going to focus on the factors that will help you improve it the fastest. So the factors that go into your credit score are paying your bills on time, making sure your debt balance is low. That's why we always say pay off your debt in full every month if you can, and other factors. But I would say the two biggest ones to focus on are just pay your bills on time and pay off your balance. So unfortunately, a lot of people don't understand credit cards. They think, oh, free money, and they forget to make a payment, or they charge something and can't pay it back. That's going to negatively impact your credit score. So you can use your credit card. You just want to make sure you're using it wisely. So only charge what you can afford. Make sure you're paying your bill off in full every month. And really, then you're going to have a good credit history. You're going to be able to get good interest rates when it comes time to get a loan. And if for any reason you didn't do these things, maybe you made mistakes with your credit, that's okay too. Just figure out a game plan to start to improve it and get back on track, right? I think a lot of times it's just simple, small shifts that really do add up over time to improve your situation. Next slide. So to help you just learn more, we covered a lot in a short period of time. And I know sometimes that can be very overwhelming, but even if you just took away one thing, that's going to help you. And like I said, it's just the constant education around money, improving your knowledge and wisdom, committing to learning every week. And there's amazing resources available to us. We have Mint, like I talked about, if you want to do your budget, track your net worth, set up your savings goals, look at your credit score, it's like all in one. We have other resources that I love, which is Investopedia. If you want to just learn, I forgot what a Roth IRA is. You can go to Investopedia, type in Roth IRA, and read, usually in layman's terms, what a Roth IRA is. Then there's some other sites there. NerdWallet is great if you want to just look for different options around credit cards or high yield savings accounts, like I talked about. NerdWallet does all, filtering of different ones. Cryptopedia if you want to learn more about crypto. So there's lots of resources out there, but I think the biggest key takeaways from today are just to remember, like I said, choose one thing you're going to implement in the next 48 hours. So maybe for you, you're going to just set up your budget, or you're going to write out all of your debts and figure out a debt plan. Just choose one thing, right? Sometimes we think we have to do everything in one time. No, just one thing, and then keep doing little things over and over. So it could be your budget, it could be doing the dream worksheet, it could be figuring out your credit score, and then just commit to learning 1 to 2 hours every week. And it might sound like a lot. It's really not. It's watching a few YouTube videos, going to some of these resources. You'll find that once you implement the habit, it becomes your lifestyle. And I think that's the best way to approach your money. Just commit to learning constantly, and you'll see that it really becomes more fun that way. And you're not alone. We're all learning together, and it never ends. So hopefully this was just a great reminder, some inspiration, and hopefully learn some valuable tips. And I'll now pass it back to you, Tony, so we can dive more into the taxes.
And I will commit to learning because I
Yes.
just learned a lot. I was actually taking notes while you were talking. So thank you, Brittney, for sharing this important information with us. I have to admit, I am thrilled to be here today, meeting all of you and talking about these topics that most people avoid when they're in high school or college, but not anymore, thanks to Brittney, Miguel, and certainly our friends from Intuit TurboTax. So let's transition to the one topic that everyone has to encounter as an adult besides dying, and it's filing taxes, even students. Hopefully it's not for a long time, the previous thing I just mentioned. So to help us navigate this tax season, please welcome Miguel Burgos. He is CPA and TurboTax Live Tax Expert, who will share with us some important tax facts, interesting tax myths, and key tax tips, and how technology and tools bring the beauty of both worlds. So welcome, Miguel.
Hello, everyone. First things first, first of all, Brittney, that was great. Thank you very much. I learned a lot. And I'm grateful. I have to say that I'm grateful to Antonio and everyone on the Hispanic Heritage Foundation. We really love what you do, and we think it's great. So thank you for the opportunity to be here and to partner with you. Talking a little bit about me, there's not a whole lot to say about me. I'm a CPA. I did my studies in my home country, Puerto Rico, the city of Calley. I became a CPA there. Now I'm currently licensed still in Puerto Rico. Still have the hope that one day I'll be able to go back and practice accounting and taxes over there. And I'm also licensed in Washington State. And I work as a CPA with TurboTax, mainly in the tax advice department. So we're very often looking at tax returns and working with taxpayers to make sure that they get the best possible outcome. Now, let's go to our first slide. Life and taxes. What do they do to have with each other? Throughout this section, what we'll do is we'll basically talk about the why, the what, and the when about taxes. And let's start with the why. Why are we talking today about taxes? Why do we have to care and learn about our tax situation? And I included here a meme that I think that captures pretty well the reality and the role that taxes fulfill within our lives. As we grow up to become an adult, we can see how our responsibilities and chores within the community that we live in impose, or we can say delegate, some responsibilities. They go from taking the trash out to then later on doing your own laundry, and finally, perhaps paying some of the house bills and helping your parents, right? And the same happens with taxes. As you grow up, little by little, your role will become more and more relevant and significant to the community that we live in. And with that, the community will impose, or we can say delegate, some responsibility, which includes paying taxes. And that's where we have to realize that many of our major life events will somehow affect our taxes, and that our taxes will grow with us. We can just do a timeline. You reach to a stage of your life where basically you start to define, who am I and who do I want to be? And at that moment, you realize that your weekly allowance received from your parents is just not enough. So you get your first job. First thing you get from your employer, a W-4, and you ask, what's this? And they say, oh, that's for your taxes. You realize, oh, wait a minute, I'll have to pay taxes on this. You move on with life. Perhaps you meet your significant other. Later, the family grows. you have some little ones coming in, you switch jobs, or you go into college and now you get some sort of tax forms about that, or perhaps you moved, or perhaps later on at another stage of life, you start helping your parents. And throughout all these events and stages, you ask yourself, how does this affect my taxes? And that's what we want to take into consideration, that basically right now you're entering into a long-term relationship with your tax return. And we want to make sure that just as you are financially wise, we want to make sure that you're also tax wise, that you can comply with your tax responsibilities, but also at the same time, you can get the best possible outcome out of your tax return. Now, not just the why, but the what. What are taxes? And I'm pretty sure that at this point of your life, you already know what taxes are. You've been to the store and you've realized that $10 are not enough to buy a $9.99 t-shirt because you also have to pay sales tax on it. Like we said, basically the community you live in or the government will impose that responsibility on you. Now, the real question is not really what are income taxes, which is what we're going to be talking today, a type of taxes that we have to pay within our communities. It's more, what's the type of income that we have to report to the government, in this case, the IRS or the State Department of Revenue, and that we have to pay taxes on. And here I'm bringing the IRS publication 501 and the Internal Revenue Code section 61A, which basically says when we're trying to determine if my income is taxable or not, or do I have to report it or not, is that in most cases, an amount included in your incomes is taxable unless it is specifically exempt by law. It also says, except as otherwise provided in this subtitle, gross income, which is the income that we have to report, means all income from whatever source derived. So if you come to me and you ask me, Miguel, can you give me a list of all taxable income? I think that probably my response would be, actually, it's just easier if I give you a list of the types of income that are not taxable. Because as a general rule, if it's income from whatever source, unless the law and the IRS says, well, this specific income doesn't pay taxes, it does pay taxes, and we have to report it to the IRS. So that's just a guiding principle that helps us to understand that if we have income, most likely we have a responsibility to report it. Now, moving to the next slide, we also want to make sure that we understand not just why, what are taxes, and also when do we have to report income and pay taxes. And the answer to that, like many other things in life, it depends. Here you will see that we have the chart with the 2021 filing requirements for most taxpayers. And you'll notice that if you're required to file a tax return, it's based first on your filing status. That's your family circumstances. Are you single? Are you married? Or perhaps you're not married, but you do have a family that you have to take care of financially and cover all the household expenses so you can file as a head of household. It's also based not just on your filing status, but also on your age. If you're 65 or above, then the filing requirement is higher. And finally, it's also based on the amount of income you earn. So depending on your filing status, your age, and the amount of income, you might be required to file a return. Of course, like any other rule and law, there's always an exception. So for those that are claimable as a dependent, perhaps some of you are still claimable as dependents, or those that have other circumstances, like for example, that are self-employed, have their own business, their filing requirement might be lower or might be different. Another question, if we go to the next slide, is should I consider filing a return even if I'm not required to? And this part is very important, especially at the early stages of your life. Many times, you're not required to file a return. You don't have enough income. Still, throughout the year, you pay taxes. There was some withholding, or you might qualify for some credit. So even if you're not required to file, even if you are claimable as a dependent, but still you have some income and some withholding, look into filing the return. The IRS is proactive when it comes to making sure you pay your taxes. But when there's a refund, they might not reach out to you saying, hey, here's the money you overpaid. You'll have to reach out to them through a tax return. So just another principle to keep in mind. Now that we have basically some principles on the why, the what, and the when, let's talk a little bit about tax paperwork. And I want to talk about three main types of forms, the W-2s, the 1099s, and the 1098. Let's start with the W-2. Basically, it's the most common tax form. Almost every taxpayer at some point of their life had a W-2. This is a tax form that the employer is required by law to report to you, to the IRS, and in many cases to the State Department of Revenue, several items, including how much income you made, how much tax you prepaid, and other items like, for example, if you made a retirement contribution or any other employee benefits. Do you have to become an expert in this form? No. But just be aware that if you work for someone, you should get a W-2. Usually the IRS require the employers to submit it to you and to them by January 31st. Now, aside of the W-2, we also have the 1099s. Like we mentioned at the beginning, your taxes will grow with you. You might start your first job as an employee, have a W-2, but later on, you might decide to move on and start your own business. Then you'll get a 1099 NEC or a 1099 miscellaneous with some non-employee compensation, or also known as self-employment income. Keep it in mind. If you have your own business, this is the kind of form that you can expect to receive. Let's say that later on, you keep growing and you become financially wise, and now you have some savings or you have an investment account. Then you get a 1099 INT for any interest income you might have, a 1099 DIV for any dividends you might earn from your investments, and one that it's very relevant nowadays, 1099B. If you have investments, that can be stocks, cryptocurrency, bonds, and you sell any of those assets or any property that you own, most likely you should get a 1099B from your broker. And usually taxpayers are a little bit overwhelmed when they see all this paperwork. But basically what you're looking for in the form is just about 5 items. You want to know what asset you sold, when it was sold, for what amount, and also when did you buy it and for how much you bought it. That way you can determine if there's a gain, if there's a loss, and if that gain or loss will be taxed at an ordinary tax rate or at a lower tax rate, a preferential tax rate. If you keep your investments over a year, then they are taxed at a lower tax rate. Now, through our lives, you might have your own business, you might have investments. Sometimes you also have to go through rough times. Let's say that you were laid off, unfortunately, and that you got unemployment income. If that's the case, you'll have Form 1099-G. It reports unemployment income and also reports other government payments. So once again, do you have to memorize all these forms? No, but just remember they exist. And as your life continually keeps going, depending on what are your circumstances, you can expect any of these forms. Not all the tax forms are just for income, like W-2 and 1099s. We also have credits and deductions related forms. Like, for example, the next ones that we'll share with you, Forms 1098. On the 1098 series, you'll see, for example, right now, 1098T, if you pay tuition, if you receive scholarships and grants, you use this form to claim any education credits. 1098E, later on, you start paying your student loan, the interest is deductible up to $2,500 as an adjustment on your return. Or you buy your house, you paid mortgage interest, then you have the 1099A, the 1098. Now, something very important. Most employers and the entities that issue all these forms, they still mail them to you. So you might still have your folder with a lot of real paperwork. But right now with technology, most tax softwares, and in this case, TurboTax DOS, you can just either take a picture of the form and upload it directly to your tax return, or you can directly import it, just entering some basic information about you and the entity that it's issuing the documents, and automatically import all that information and make sure that it's reported on the proper forms and schedule. So once again, it might seem like a lot, but if you use the resources and you just get familiar with your forms and tax situation, the process doesn't have to be overwhelming. You can understand it and still get the best possible outcome. Now, we know the why, the what, the when. We have some basic knowledge of our tax forms. Let's go to the next part of this presentation. Let's go to talk about some tax myths. And I would like to talk about mainly two of them. Let's go to the first one. And this is kind of like a fun fact, but it also has a valuable lesson. Some say the Internal Revenue Code is over 70,000 pages long. And their response is, that's true. It really is that long. However, although this fact, it's kind of overwhelming, just keep in mind, not all 70,000 pages of the Internal Revenue Code will apply to you at the same time. So when tax time comes, just use the resources, use the tools, reach out to the experts. Like in this case, you can reach out to the TurboTax Live experts to make sure that they help you to first understand your tax situation, to identify the tax law that in this case needs to be interpreted and apply to your tax situation properly, making sure that you get the best possible outcome of your tax return. Let's go to the second tax myth. And this one is one that I really like to share with everyone. If I make more income, then I pay more taxes. More taxes are bad, right? True or false? Well, in this case, the answer that we chose is that it is true and it is false. And this is what I like to share with you. We know that we have a progressive tax system, which means the more income you make, the higher the tax rate you have to pay. And it's also true that we want to make sure that you only pay the taxes that you have to pay. You want to take advantage of any potential tax deduction and tax credit, but never hold back from any income opportunity just because you are afraid of the taxes. And this is the way a professor helped me to understand it. He asked me, Miguel, would you rather pay $300,000 on taxes or $1 million? Of course, me and most of the class said 300,000. And he just did the basic math with us. Well, if you paid 300,000, you had about $1 million on income. However, if you paid about $1 million on taxes, that means that you had about $3 million on income. Do the math. It is true, one of the taxpayers paid more taxes, but at the end of the day, who ended up with more money in his or her pocket? So the principle and the lesson is the following. Don't be afraid of taxes. Just have understanding. Be prepared for them, but never hold back from losing or taking advantage of any investment opportunity, or looking for additional sources of income just because you have to pay more taxes. All you have to do, once again, is understand the situation, be prepared, use the tools, so when tax time comes, you're ready, but still, you'll have more money in your pocket. Finally, I have some tips for you. One of them, it's mainly for students. If you're not in college yet, you'll be soon. And just keep in mind these two credits, the American Opportunity Credit and the Lifetime Learning Credit. Of course, these credits need to be coordinated in the sense that if you're still claimable as a dependent, basically your parent is entitled to claim you on their return. But depending on the circumstances, your parents may decide not to claim you, let you file as a dependent. You can't claim yourself if you're claimable, and then let you claim the credits. Of course, this needs to be evaluated on a case-to-case basis, but just be aware. One of them can be up to $2,500 per student, and the other one can be up to $2,000. Once again, if you need help, feel free to reach out, TurboTax.com, and we have a lot of articles on the bilingual blog with more information about this credit. The last tip, in this case, the second one, we'll see the slide here in a second, is keep your tax withholding and estimated tax payments on check. The reasons, first, probably you want to avoid the underpayment penalties. Not a lot, it's less than or about 0.5% of your balance due, but once you owe over $1,000 on your taxes, the IRS will charge that additional penalty. Also, you want to avoid any unexpected balance due. You don't want to get any surprises at the end of tax season. But once again, here, there's different approaches. Each taxpayer might think differently. I've seen taxpayers that they just like to get a huge refund, so they get as much withholding or send estimated taxes as much as they can. Some taxpayers just like to break even. I don't want to owe a lot, but I don't want to get a huge refund. I just want to pay just enough and keep the rest of my money in my pocket. And there's other taxpayers that they say, I'm not paying anything. I'm keeping the money in my pocket. I'm going to invest it. I'm going to use it for other things. And later on, I'll save the money. I'll have it ready and I'll pay the IRS for all of it, including the about 0.5% on their payment penalty. But the principle is, as you see here, these are tools that you can find in TurboTax.com, including the tax bracket calculator that will help you to determine at what tax rate you're at, the W-4 withholding calculator, and many other calculators that you can use to make an informed decision. And based off your circumstances, you can determine, do I want to pay more? Do you want to pay just enough? Or do I want to keep all of it and then save it and pay it at the end of the season when I have to file my return? It's your decision. It depends on your circumstances, but here you have the tools to make an informed decision. To conclude, I just have a few takeaways or a few key points. We encourage you to be basically tax aware, to have a tax mindset. Remember, most of your major life events somehow will affect your taxes. And as you grow and you become a successful person financially and in any aspect of life, your taxes will grow with you. So just always have it in the back of your mind. What effect will this have on my taxes? What do I have to do to be prepared for the tax return? Reach out to the experts, use the tools, use the resources that we have available, including in TurboTax.com. Many of them, you can access them from your phone, like you can see here. Also, get familiar with your tax situation and forms. Keep in mind, you don't have to be an expert on the forms, and many of these forms you can electronically import to your tax return when you're preparing your taxes electronically. But just know what kind of forms you should receive, when you should receive them, and what do they mean, so you can understand your taxes enough to have peace of mind and also make informed decisions and get the best potential out of it. And finally, use tools, resources, and reach out to the experts. I have to say, at Intuit, we love to see young ones that really want to reach out, that are making decisions to become someone, and we don't know what's going to be of you. Perhaps you're going to be a doctor, an electrician. We don't know, but we know you're going to be successful. And we also know that as you grow, your taxes will grow with you. Just know that we can't help, and we really, really want to help. So we wish the best to you and everyone in your family. And I think now I'll pass it on to Antonio, please.
Thank you so much. Appreciate you basically highlighting everything I didn't know. So I know we're running out of time, but I wanted to thank every one of you that tuned in today. And of course, our wonderful experts, Brittney and Miguel. Hope you learned something new and walked away with key tools that'll help make your life easier and set you up for even more success in the future. And again, our team will be circulating answers to the questions that you asked, because we have them captured in this webinar and we'll be able to help you out. Lastly, thanks again for Intuit TurboTax for creating this important space, and for a scholarship program that you should please apply to be one of the 40 #leading con educación scholarships. Applications are open until May 8th. Again, please visit HispanicHeritage.org/leading con educación to learn more. Have a great afternoon. Stay safe and healthy in every way, including financially. And thank you very much, everyone, for taking part in this. It's been a privilege to be a part of it myself.